Yo, what's good, everybody? This is your boy Rory, and I'm here with another video. But before I start, right, I gotta say something. Like when I first started investing, right, when I first started this channel, I should say, I saw a lot of YouTubers that were basically bullshitting people. Like I'm gonna keep it a buck today. Like they were bullshitting people, and they seemed to be grifting and stealing from people by posting these crazy ass videos about pumping these stocks that they know were risky, and if they didn't know that they were risky, that's even worse. Like these people, a lot of these YouTubers are on here specifically, and you are the product, because they don't seem to give any value to the people that watch their videos. If you go look at my history of the stocks that I've picked for this channel, including the stock that we're about to talk about today, if you go and you find anything about my videos in any of the stocks that I've chosen where my stock has cratered 20, 30, 40%, I challenge you to do that. I'm not saying that it's impossible, but I've been making these videos on and off for about a year now. And this is one of the first stocks that I ever did a video on. And it's not rocketing like Nvidia or Apple or any of the other sexier names that people fuck with once it comes to stocks that are very popular, but it's not going to crater, at least not from my perspective. It's a very boring company, but they work in a very essential and a growing market, as you're about to see. So, of course, today's video is about Timken, and they sell tools and accessories, but specifically, they sell stuff like bearings and parts like that are used for a lot of different things like machinery. And we all know that robotics is about to be on the front line, and everybody's worried about artificial intelligence taking their jobs and stuff like that. Well, artificial intelligence are going to be controlling robots, and robots need parts like bearings. And this company is one of the biggest companies in their sector to be doing it. And they're a very, very old company as well. There are a lot of things you need to know about this company before you invest in it, though. So let me go to the investor relations part first so you get some perspective. First of all, if you dig deeper, you're going to find out that Timken is a company that's actually based in India. So you're basically investing in India, but this is the NYSE listed stock that you're going to be invested in. Ticker symbol TKR. Like I said, anytime you want to know about a company, you can go to their website and you can find out why they do what they do and what they do. So anyway, this is a quick, brief history of them. All the information is going to be on here. You can go check it out for yourself. But I think this stock is worth watching at least. At least keep an eye on stocks or stocks like these. Because the big sexy ones are going to make you a bunch of money. A lot of them are just business plan. This company has been around for a very long time. As you can see, 100 years this company has been around. And they're still here. So that should count for something. This is a history that this company is built. So we're going to go back to Yahoo Finance. And all the resources that I use today, I'm going to share links to them like I always do in my long form videos these days. But stay tuned, you're going to want to watch this. This is very important because artificial intelligence and robotics go hand in hand. Because artificial intelligence can't lift up a heavy thing. It can't do stuff in Amazon's warehouses. It can't do a lot of things that are going to need to be done with robotics because it's just artificial intelligence. It's going to be a component. It's going to be like the artificial intelligence is going to be the mind, and the robotics is going to be the body. So here we are, Timken stock. You can see since I first reported on this stock, it's only down about 2.35%. And they pay a dividend every year of 1.78%. So it's actually less than that, and they pay it quarterly. All time, the stock is up 940.49 over its lifetime. So the stock's not doing bad. It's not a hyper growth company yet, but I think there's a possibility it could be in the future, in the near future. So if you're interested in building a position in a company that you have conviction in, this might be one that you want to look at. But I think the finances of this company are not perfect, but I like a lot of things that I'm seeing. Price of sales is cheap. It's like half off right now. Most stocks at value are usually price of sales at two. You can look at the profitability. It's a bigger profit margin than a lot of other companies. They have returns on assets, returns on equity. They have some money. They have some debt, but they have money to cover that debt. The float is small. They don't have like 2 billion shares. So you can buy some shares and you can watch them become more and more important as time goes by if the stock grows and it becomes more in demand. They have high insider ownership. This is something I like a lot too. They have short interest. For what reason, I don't know why people would short a company like this with 100-year plus track record, but good for them. And the payout ratio is not all crazy high, as you can see here, 27%. So we're going to go and do what we usually do. We're going to go to Yahoo Finance. I mean, to we're going to go to NASDAQ and look some more at the stock and see what's going on under the surface. But we're going to go to macro trends first. The ticker symbol TKR. Let me expand this a little bit first. Boom. All the resources that I share are going to be free. So if you like free stuff and you needed free stuff to learn how to screen your stocks, I got you. Revenue and profits, you can see they crested here in 2012. I don't know what was going on then. That's something I have to research myself. Always do your own research. I'm just giving you tips. This is not financial advice. Don't make any decisions about buying or selling stocks based on what I say. Go and do your own research. But as you can see, since 2014, they've been on a cyclical uptrend. EBITDA, these are all things I like to check. Net income, I don't like to see stocks that don't perform over time. They're very risky. And that's the reason why I post the stocks that I've posted so far. But I'm going to start posting popular stocks too. I just wanted to start here. Shares outstanding. They buy back shares. So the small float already, the small amount of shares they have is getting smaller and smaller and smaller because they're buying back the shares. Assets and liabilities, shareholder equity. Shareholder equity is exploding, and it's partly because of the share buybacks. Margins. Look at that. Their margins are so strong, and their net margin, look at that. Almost double digits net margins. Crazy. I don't know why people don't talk about stocks like these. They're secretly be crushing the market. As you can see right now, over time, you can go back all to 2009. The stock seems to be trading at or below value right now. It's at a 12. It's traded as high. It's traded as high as almost 20. Look at that. So it's getting cheaper and cheaper, but the value is increasing and increasing. Free cash flow. I like to look at this over time as well. Look at that. They haven't had a negative free cash flow since 2011. It's a very long time to not have negative free cash flow. I like to check out the returns. They seem to be doing pretty well. ROE, excellent. 18% ROE. Let me check their debt to equity first, though. Look at that. Their debt, their equity is growing, but so is their debt. They don't have a very long history of paying off their debt, but they've, as you can see here and here, they've done it before. So that's something else you might want to consider. Anyway, ROA, yep, ROI. Look at that. Look how steady that is. They've consistently had good returns. And then their dividend. Let me see. They don't raise their dividend often. It looks like they had like some special dividends in 2015, but they are pretty steady with their dividend. You like to see a growing dividend. A lot of people like that. But for me, I would prefer a company that doesn't pay a dividend at all a lot of times. Like let the company that know what they're doing and know their company better than I do take that money and reinvest it back into the company. That's what I like. We're gonna go to NASDAQ now and ticker symbol TKR. And I'm just going to go straight to the main tab of the company and look at earnings. What are the projections that the analysts have? You can see the yearly forecast is growth. Growth till 2027. I'm not saying the analysts are absolutely right, but they know what they're doing. They've been evaluating stocks a lot longer than I have. Once it comes to institutions are selling the stock a bit. They're not buying a lot right now. They're basically holding because it's almost equal by increased and decreased positions. I'm gonna go see if I can see the insider activity. Insiders are selling this stock, which is typical. A lot of people make their income with stock. The company pays them in stock and they just choose to sell the stock in order to pay their bills. And that's okay to me. I don't have a problem with that. So we're going to go over to stock analysis and look at them more visually again over time. Ticker symbol TKR. And we're going to go straight to financials and see if any red flags pop out to me from where I stand. Net income is down. That's something I don't like. But I think the reason why the net income has been down is because we didn't have a presidency or a world economy that was really fostering growth, industrial growth. We've been focused on a lot of things that are not industrial and growth related, and then the interest rate and the inflation has been, a lot of companies have been adjusting to this, but they don't have a lot of red flags on their income statement from where I stand. Their cash is actually growing, and it's probably because what we just saw that they were taking out more debt. Look at their receivables though. Look how their receivables are exploding. Exploding receivables and their inventory. They're ready to service their customers. They have assets in order to sell to their customers. And look at how over time their assets are growing and growing. It's not choppy up and down. Their property, plant, and equipment is growing, but it's not growing out of control. Yeah, I'm liking what I see here on the balance sheet. Their cash flow. The net income is not steady, but it's growing over time, and you like to see that. Yeah, I'm liking what I see with this company, like I did the last time that I evaluated it and posted about it, because I like what I see. There's the potential is here, and even though business isn't going perfectly for them, their market cap is growing because they're buying back shares as part of it. They believe that their stock is undervalued, and a lot of companies do, but this is 100-year-old plus company. Why would they why would they buy back their own shares if they don't know that their stock is cheap? As you can see, the PE ratio has been high up to 20 back during COVID and it's coming down and coming steadier. It's a little bit higher now, but yeah, from looking on the surface, I like a lot of things about this stock. We're going to go to Finviz and see what they think, see what the forecast is. Ticker symbol TKR. Excuse me. They haven't done well in the past, the recent past, but year to date, they're performing pretty well. Somebody knows something. Maybe they've been buying back their own shares because the stock market has been beat up as of late. That's good that they have the money to even do that. You can see the returns again here. Look at their gross margin, 30%. Look at their profit margin, 7%. Nice, boring companies. That's what I like. So they're not up and down and up and down and up and down and up and down. I don't like that. I like steady. Earnings per share next year, they're forecast to grow, but they're forecast to come down this year. And that's cool. So, all in all, looking at this stock from my perspective, I don't own the stock right now because I built a portfolio that I wanted to be a bit more aggressive, but geared toward the things that are happening in the economy now. And I just bought the robotics. I bought a robotics ETF instead of buying this company because the robotics ETF has more risk in it. Because the portfolio is very safe, I decided to add some risk in the robotics area. But I'll always keep an eye on this company. When I graded this company a long time ago, it graded a 23 out of 30. So that's on the higher end of my grading system. But do I like this company now? Would I buy it? Would I sell it? I wouldn't sell it. I would at least hold the company. But from what I'm looking at, if I was a new investor and I wanted to be invest in the robotics industry, in a stock that's proven, that has a proven track record, and not just the robotics industry, all the industries. We're talking about automotive, we're talking about oil and gas. This company does business with all those types of companies. If I wanted to be invested in this kind of company, once it comes to industrial, with the potential for huge growth in robotics, this is a company I would be looking at. Am I bullish on this stock? Yes, sir. Yes, I am. Thanks for thanks for being here. Thanks for if you made it this far, thanks for looking at the video. Like, comment, and subscribe for more content. Till next time, I'm going to be putting out videos that are about more well-known stocks and what I think about them. But if you ever have a suggestion about a stock that you want me to evaluate or you want me to take a look at, just let me know in comments. I got you. Everybody have a nice day and peace out.